flight to Miami. Touched my first 10,000 in Miami. Understand me? Why you think I like mojitos? Flight to Puerto Rico. It was me and Wayne. No matter what, that's my bro. Times got hard, backed it up, and then we sold those. K9s hit the train. I'm thankful they didn't find those. They looking down.
Yeah, we're gonna give people a couple minutes to
my son, 3 months out
check this shit. And then y'all gonna want some time.
Reno, Tahoe, LA, let's get it. Then hit the Tri-City. Man, Jersey, Philly, DC, she with it. It was nothing like that feeling. 2-piece at 19, sent the on the double. Now we out in Santa Cruz. Ordered some pancakes from Denny's. Baby busting the move. 500, that's cool. Your first call, that's smooth. I really came from nothing, so I'm humble with it. Make the right move, don't stumble with it. Life get crazy, I just rumble with it. I ain't going out like a bitch. I want it, I'ma get it. I ain't stressed out by the chick. It's way too many. Yeah, for real, nigga. Cold summer. Check it out. Cold summer. It's way too many. Man. Yeah. Cold summer. Cold summer.
We're gonna probably get started, I guess, like 11:05. Give y'all cats a couple minutes to get it. Y'all can send me questions through either the message board or on here. I'll try to look on Twitter, but try to keep the questions either in the message board or through the YouTube chat.
I'm gonna tell you some real motherfucking game. No, just listen to me. You know, man, the game is no different from being on drugs, you know. Once you win, it's hard to leave. You get addicted to the fast money no matter what. It's crazy.
Yo, what's good, Sean?
I've been all on the road. In every real piece,
Sean, the only dude that didn't get burned by Disney like the rest of us.
Bottle, iTunes, and playing the low. Had to cut her off, she was playing with her nose. Bitch, you out of pocket, gotta stay on your toes. Numbers, bitch, you know what I'm on. Spit 250 on the LV cologne. Off top, yeah. I'm macking the hoe. Everything I say, bitch, always go. I can't babysit, but I can break on you though.
For those of y'all that's just tuning in, like I said, try to keep the questions. I'd prefer if y'all keep all the questions in the YouTube chat app or in the message group. I'm gonna try to check back and forth on my Twitter, but it's gonna be kind of difficult for me to see the questions on Twitter. Especially after I just did that Kim K tweet. So my notifications got a lot of bullshit in it.
Bitch, what's happening? You been catting off hella. Doing it big, I'm living like a good fella. She knew from the conversation I'm having cheddar. Put her in the beam.
Bro, I needed to recover after the Disney, bro. I needed they call this self-care. I've heard in the mental health circles, they refer to this as self-care. Also, by the way, if my Wi-Fi happens to cut out, I'm also trying to record this. So, worst case, if it buffers and it fucks up on the YouTube end, I'm going to have a recording on my end and then I'll just upload. Because my recording should be good. It won't have any other latency or glitches if it happens.
I'm getting cash, baby. Yeah, big cash. But I always want.
Sean ain't get burned like us, though. Nah, Sean ain't get... I know we all got burned, but Sean ain't get burned like us, man. He had the puts in action. He had the insurance, man. He's trading safely, man. He trades with rubbers. So he put the rubber on his trade, had the put. So he didn't catch that L like we did. But again, even me, I caught that L. I told y'all I don't even be fucking with name brand stocks, man. I was chasing shit with y'all. Even me, I let my emotions get the best of me, and I keep telling y'all, man, emotions gonna be your killer, bro. Like straight up, it ain't gonna be your trading strategy. It ain't gonna be a lot of shit. It's gonna be emotions. Emotions will fuck you up. As we also niggas was trying to live our, like, I forgot who said that in the group, but we was all trying to live our childhood through that Disney play. Held on too long and got burned. But it's all good. It's a lesson learned. I'm glad it happened, especially for people in the group. I've been burned like that enough times before. So I'm not even upset because I know exactly where I fucked up at. It's something that I told myself to stop doing and I just, fell into it. Yo, is this music too loud? Let me know. Or if y'all need me to turn it off, if y'all can't hear me, let me know.
Every time the bitch hit, it made me proud. I'm on my way to my woes. Let's go eat and fuck off thousands. You like hibachi? I ordered the lobster. A bottle of champagne, we do it like mobsters. I should've took your bad ass with me to Maui. Run up a check. I heard it is pop. I was out the gang with the check.
Alright, we'll just get started. And I guess everyone else who isn't saying they just go catch up. Yeah, straight up. It was good that we learned from that. So before we get started, I just want to touch on a couple of things that as a collective, especially Options Gang as a collective, that we've learned. So, pretty much off the 10. Alright, I got you. Let me turn that shit off. Alright, bet. Boom. So, the first thing I want to, I got you, James. My bad. So yeah, the first thing we want to understand is less is more, and recapping our month of plays. Most of them hit, a couple of them lost. We got some extra, additions from the community who do some plays with us, and outside of the Disney plane was the only real one that we got burned on. And to be honest, if you really think back on it, like a lot of the strongest plays, if you really just chose to play those and didn't play everything, you'd be up a lot right now. You know what I'm saying? Even you should still be up regardless whether or not you got burned by Disney, because if you were properly leveraging your bets, you would have things spread out evenly, and that burn shouldn't have compromised your total bankroll too much. It should have just been like an L you take whenever you take an L when trading, because L's are inevitable. It's a part of life. All we're trying to do is just average more wins than L's. But to ever come into this game thinking we're not going to take an L or there ain't going to be no L's, that's straight up, it's impossible. You know what I'm saying? So less is more. So even when I give out a play, even when a community gives out plays, understand that you got to still use your own intuition and your own judgment and your own gut to decide what you want to hop in on, how long you want to stay in on it, you know what I'm saying, when you want to hop out, if you even want to play it at all. Or even if you want to play opposite of how we playing it. Because you are free to do that, you know what I'm saying? We are all developing our own individual strategies, and the whole point is to win. However you win is how you win. If you win because you win against the option game play, nigga, you won. So that's what it's all about at the end of the day. So keep that in mind. Less is more. You know what I'm saying? Just because a play came out doesn't mean you have to play it. Just because a community play came out doesn't mean you have to play it. You know what I'm saying? And just think about that. Just think about if you just played the ones you felt strongly about and didn't play everything else. And just do the math on that and see what your account would have been. Because I'm sure there was some plays you felt stronger about and some plays that you just hopped on because you seen everybody else was hopping on. You know what I'm saying? So, again, going back to emotions, man. Emotions going to be a real killer. So you got to pay attention to that and keep that in mind. A question that was asked in the message board before we even got started, I forgot who said it, but he couldn't join the chat, was how do I choose stocks? Now, to tell you the truth, I can't, there's no clear, for me personally, there's no clear cut answer to that question. I run up on certain stocks from various means. Like sometimes I just come across some type of product innovation and I look into the back end company behind it and I'm trying to, see what's up with that. So like, for example, I forgot who in the group, man, forgive me for forgetting who put out the Soli play. So now a lot of people are looking at Soli, which doesn't have options, but people are looking at it as a long-term stock because we know about that back end tattoo technology that's about to be coming out and get announced. So this is not me co-signing to get on Soli or anything like that, but that type of information is the type of information that would put something on my radar. I try to keep like 20, 30 stocks on my radar, on my watch list, and from there I'll pick plays out of them. And just because something's on my watch list doesn't mean I'll ever even make a play on it. It's just if it's interesting enough for me to follow up on it, I'm gonna put it on my watch list. And another thing to keep in mind with that, like less is more. Like I really try to keep my watch list to like 20 because you're only human and you can only pay attention to so many companies. So it's better to know 20 companies really well than to know a little bit of useless information about 200 companies because it's really not going to serve you any purpose in terms of making a play on it or doing anything with that. So that's one way I may run up on a stock. Sometimes you know, we're using resources like, bar chart, trading view, etc., where you're just looking at activity. So sometimes consistent increases in volume might catch my attention to a stock. You know, sometimes I'm playing off of other people's mania. With a lot of the weed plays, since these companies in the whole weed industry is completely overvalued, you can't even honestly make a appropriate valuation on any weed company based on fundamentals, because every single one of those companies' fundamentals are completely out of whack. They're all trading like a million times, not a million times, but they all trading like, I think Tilray's 250x forward profits. All these things have ridiculous forward profit valuations. So when I'm playing on a weed stock, like a lot of times I'm banking on mania mixed in, where I'm adding fundamental analysis to it. Uh, So when I see a trend happening with the charts, I'm like, all right, if this trend continues, I know you're gonna have a whole bunch of retail investors in it, and they're gonna start panic. Say if I'm banking on a downtrend, they're gonna start panic selling when they see the trend coming. So that's combined in, all right, let me hop on this right now. I feel like this is in a good position to go. But also, one thing I really want to stress to y'all, because this is trading is like, I always use it's like we all chefs. We all chefs that we got to make a soup, and each one of us could put different ingredients in our soup, but all of us can make a fire soup. It don't matter, if your shit got meat, his shit could be vegan and still fire. This dude got, don't like carrots in his shit. This dude got, it could be whatever. The whole point is to find your recipe and make it work for you. So now, also in turn with that, in terms of selecting stocks, you have to use your life experiences and your career experiences to help guide things you look at. Like for example, some of you work in the medical industry, so you guys have innate knowledge about certain prescription drugs. You guys have innate knowledge about the industry. So apply some of that knowledge from your background. If that's what you're into, if you're into construction, you know things about you know, big, large construction firms, things about equipment manufacturers, so you should be looking into companies like Caterpillar, et cetera, et cetera. And you should, use your own expertise and use your life experiences to also add and customize your soup, your trader's soup, and how you want to cook it. You know what I'm saying? Because the whole point is, even as y'all already been seeing, man, and it's so crazy. I love the growth that's been happening in the options game, and I love all the collaborations, different people showing the different ways they do things. By the end of the year, none of y'all should need an options game membership. At the end of the year, if y'all doing it for next year, it's because y'all looking out and y'all just want to be part of the community. But y'all should really have everything y'all need to develop what you need to do. So that's the goal of it. So that's what we really got to get out of it. Don't try to be a play addict. Don't try to get addicted to plays. Like, use the plays, get the fish, but also become a fisherman and learn how to develop your own plays. Try things out, experiment. Just put a little bit of money. Just do a little one contract or something you think can happen that nobody even mentioned. Do that. And another thing I'm going to do is, on my end, I'm going to work on creating a fourth channel for the group so we could consolidate, because the message board is crazy. Y'all motherfuckers, I put my phone down, I come back, it'd be like 450 messages, so I can understand how people miss out on community play. So what we're gonna do is, like, in the future, when y'all come up with a community play, um, send it to me on the side chat the same way y'all do when y'all want me to do a chart. And then we'll basically post it, and it will be like your sponsored community play in that channel. I'll be the only one that posts in that channel, but we'll just put all the plays and any news articles you guys have contributed. Send it to me on the side chat so we could consolidate a channel with just the information, like, from the community in terms of plays, news articles, so people don't have to go through the fucking 1,000 messages to find what they need. What do you got? Any recommendations for complete beginners? Complete beginners should not be fucking with options. That's my first recommendation. So the first thing you should do as a complete beginner is you should focus on learning stocks and just learning the basic concepts of trading, and probably experiment with a little stock trading. You should experiment with some stock trading before you even consider options. The reason being is that options are highly volatile, and they're a little bit confusing to learn, but once you get them, you understand it. But basically just because of the volatility. First of all, it takes a certain type of stomach to manage options. So you could be a great day trader. There's a lot of stock traders and day traders that don't fuck with options at all. Like it's not a popular market, so to say. But so I would definitely say you got to learn the basis on stocks in general. So, they got a lot of free sites. I tell people all the time, go to khanacademy.com. It's like one of the greatest things ever made. People don't know about it, but you can basically teach yourself anything you want in life off of khanacademy.com. So I definitely take, the stock classes over there, learn all the key terms and things like that. And I would get comfortable with stocks first before I even consider options. Like if you don't know stocks, don't even look at options. I mean, in my experience, people who've traded forex have had an easier transition to options, especially because forex is very chart intensive. And speaking of charts are another thing you got to know. Start messing with options. So for that, I would just recommend going to Baby Pips, which ironically is a forex site. But you could, if you want to learn forex, you could do the entire course. But if you don't, you could just skip the forex parts. But it's a great site to learn how to read charts. That was actually my initial venture into reading charts was when I used to trade forex. So that's where I learned how to trade charts. So I always recommend it. It's a good thing. It's also free. So that's definitely that's what I would suggest for beginners. You want to get a handle on stocks before you even start considering options. What's the best way to determine strike price and expiration date? Is that subjective? That is 100% subjective. Um, so when you look at any type of when you're doing any type of yo, hold on, y'all niggas. I just opened up the message board. Y'all got y'all, y'all got me dying. Um, this is not yeah. This might be the finesse filter. Yeah, I might have to trademark that. You know what I'm saying? Also, we do plan on doing finesse brunch in the future. The art of finesse. You know what I'm saying? We already own finesse brunch and thefinessebrunch.com. So we're gonna put that into use. I suggest one of y'all buy finessefilter.com because I might cop that in a few. I like that name. But one of y'all could beat me to the punch, if y'all got some available time during this live stream. All right, back to the serious thing. All right, what's the best way to determine the strike price and expiration date? Is that subjective? It's 100% subjective. The things you need to keep in mind. So when you talk about option pricing is going to basically have three major components in their pricing. It's going to be the time, expiration date, the strike price, and it's going to be the underlying price of the actual asset you're taking an option on, so the stock that you have the option on. Also, it's like a little fourth like mystery factor, which is just the general market, because like anything in life, like it's a market. It's a buyer and seller on both ends. Like anything you're doing when you're trading, there has to be a party on both ends, So that's why open interest and things like that are important, because there needs to be, when you're buying a contract, there needs to be a seller. When you're selling a contract, there needs to be a buyer for the transaction to happen. So that also has an effect on the pricing. So now going back to choosing a strike price. So when you talk about strike pricing, these things are going to be subjective in a manner of if you take a price that's further away. So all right, let's talk about out of the money and in the money contract. So a contract is considered out of the money when the contract as is with the stock price as is, the contract is already profitable. Meaning that if a person executes on a contract, they won't lose money. They'll gain money from actually buying or selling the 100 shares. So when you buy an in the money contract, so that's something that's going to be at or below. Well, if you're doing a call, it's going to be at or below the stock price, and if you're doing a put, it's going to be at or above the strike price. The further away out of the money, the less likely that contract is to be profitable. But with you taking that chance in the likelihood of it not being profitable, you get two things. You get a cheaper contract for one. It's going to be extremely cheaper than one that's in the money. And two, if by any chance the stock price does rise to that number or above it before the strike range, you will have way more profit return percentage-wise than the contract that you purchased already in the money, because that contract that you purchased that's in the money is already going to have the value built in because it's already profitable. but it's also going to be a lot more expensive. So that contract will gain value as well, but it just won't gain value at the rate as the further one out of the money. But at the same time, that one that's in the money is is has a higher probability of success in terms of being staying profitable until the expiration date. Now, when you look at the expiration date, it's pretty much the same concept. When you do it expiration closer to the stock price, it's going to be a lot more volatile to the price swings. But if the price swings go into your favor, the profit percentage wise will be a lot, as opposed to if you have an expiration that's further out, the price will be less, the volatility will impact that contract's pricing less because it's so far out and there's so much more time for the the price to reach that number, so to say. So again, it's a compromise. And then if you want to take a far out of the money contract and put it short term, that's super high risk. So it's again, but also if it does hit, it's gonna be super profitable. But so the risk and reward is they're brothers. Like it's not gonna. The more risk you take on your options contract, the higher the reward will be, and it's the higher the loss is gonna be. But also remember, the only loss you can take on an option contract is what you pay for the premium. So that's the max you can lose. But if you put a shitload of contracts out and your premium's a lot of money, then that could really hurt you. But again, this is going back to leverage, and this is why you got to balance out your plays, and you really can't go too heavy on one play. You can't let your emotions fuck you up out here. You just feeling something and you just go crazy. I know a lot of people got burnt by Disney that way. I mean, I did too, but trust me, I didn't get burnt. I got burnt, but they ain't compromising my bankroll like that. You know what I'm saying? So that's just how you got to play it. I think a lot of people yeah, you're right. A lot of people do buy out of the money contracts because they're cheaper. And you're right, they don't give enough time to it. And that's the eye candy. The older contract's cheaper, so let me buy it. But that's why, if the shit don't go that way and it's coming close to expiration date, that contract loses money just as fast as it gets it. So and again, if your contract gains 100% in a day, it can lose 100% in a day. You can't. And this is why I tell people, even if you're trading, not everyone's gonna have the option for the stomach for options, because again, you got to be able to eat a 60% loss in a day and stick to your strategy, because the options ain't necessarily gonna hit. And we're gonna go into that because I want to pull up a chart because I want to show y'all some funny shit because. Pricing doesn't go up in a linear pattern. When a price goes up, it's like a rocky road up. So in the stock, it's just, a little 5% loss here, 4%. But in the options, that's just like 60, 80% back and forth. So again, you got to have this type of stomach to accept that volatility, or you got to really be cold-hearted and stick in your strategy and not letting your emotions get the best of you. Young motions, if it's 100% gains in a day, just cash out, protect your gains. Absolutely, yo. That's why charts start, and me, I'm never going to tell people when to enter or exit a play, but that's a great point you made. And, we get a little spoiled because we be getting crazy gains, so dudes think that shit going to last forever. It's like, bro, the same way that shit goes up, it goes down. So I always tell dudes all gains is good gains. If you up 50%, 60% in a day, that's great gains. I know you see the psycho set of option game holding shit dumb long, but you have to trade for you. Don't follow these dudes. Do you? Don't follow these dudes. So that was a great point. 100% gains is definitely good. James, how do you determine your short-term cycle versus long-term plays? And I assume your risk tolerance would be less for cycles. Probably all subjective. It definitely is all subjective, but you should never. Long-term and short-term plays and cycle is three different things. So you can have a long-term play, you can have a short-term play, but them cycle plays, that shit's crazy. So to be honest, most of our plays, in essence, are short-term plays, even though they're a couple months out. When you start doing it, shouts out, yeah, hashtag all gains are good gains. Y'all already know the slogan, right? We're going to definitely have to put that on a shirt eventually. So speaking of shirts, shouts out to my boy Rich Threads, man. It's a black-owned company. Go check his site out, richthreads.com. You know what I'm saying? If you want to go cop that, you know what I'm saying? It's my brother, black-owned business. But, so James, going back to your question, so your short-term versus long-term plays, I think it's just your risk tolerance. And I think when you're options trading, you have to diversify your trades the same way you diversify a portfolio when you got stocks. So again, if you're a conservative person by nature and you're playing options, all of your options should be far out. All of your options should be 6 months, a year out. Like, because if you're a conservative person, like there's no reason you should be trading options anything less than 6 months. And that way you could just sit. Oh, word, that's crazy. That's my brother. Like, that's my brother. We're gonna talk about that later. Yeah, now Rich Drudge is my brother, yo. But anyway, so if you're a conservative person by nature, you shouldn't even be looking at a couple months out. Like, you push your shit out. Like, and again, even like the dudes that got burned by Disney, if you was holding like a contract in 2020, yeah, it might have lost some value, but if you didn't get burned, like your contract is still open like that. It's not like you just lost a little bit of value. And if it hit, you would only gain a little bit of value, but you got that longer cushion, and the daily movements of the stock ain't gonna give you anxiety as much. You know what I'm saying? So is forex trading less volatile than options? I'm considering it, but I like options. Forex trading, I don't like Forex trading personally, and it's not to say anything like that. You got to find what works for you. Like, some people only trade Forex, some people mix Forex and stocks, some people only do Forex and stocks, no options, some people do all three. And you find what works for you. I don't like Forex because Forex is another chart. Everything you got to do charts, but if you're trading Forex, you're doing a lot of day trades. And me personally, I'm more of a swing trader. Like, I never really wanted to day trade. So like, even like how I do these plays, they're based on swing trades. So swing traders aren't banking on intraday movements. That's why I don't. When y'all are talking about when the shit is moving during the day, I'm like, I don't worry about movement in the day because my time frame of the play has a longer scope. So that scope understands that there will be some depreciations in the process of the incline, if that's what I'm banking on, an incline, or there'll be some appreciations if I'm banking on a decline. Like, you have to factor that stuff in. So that's what I'm saying, why the time matters. Like, you put it out to what you could think. So Forex, I wouldn't say Forex is definitely less volatile than options. Forex is definitely a very news sensitive market, I would say. Global political news can really shape movements in Forex. So a lot of times people make money because they have to jump on news stories before they're coming out. So I just don't like it. It's not that it's definitely less volatile than options. I would personally say that, but it's up to you if that's what you want to do. It's definitely a market. There's people that only trade Forex that are making millions. So it's not, I'm broke, so don't listen to me. You said you don't trust the daily time frames. Why not? All right, the reason why I don't trust daily time frames, one, because I'm not a day trader, and so I really don't need daily time frames in my investment strategy. Also, when you talk about chart readings and even indicators and a lot of these technical analysis things, people got to understand, like, at the end of the day, all of this stuff is still subjective. Like, you can have all the technical analysis indicators can tell you something is going to happen, and the market does the complete opposite. The market behaves very irrationally. Do not come into trading expecting reactional responses for the market, a la the case of Disney. Disney with the Endgame premiere, although we did get that little quick bump, when we discussed in the group, the real money came, smart money came in probably like April 8th, April 10th, around that time on Disney. But Endgame breaking all these records and Disney goes down. So irrational things like this happens in the market all the time, which is why I personally stay away from name brand stocks. But that's just something that that happens. So now going back to the charts, even chart reading is still technically subjective. Like, even when people draw support and resistance, people can give you different support and resistance lines and have a good rationale for coming at both different numbers. So the reason why I don't trust daily chart frames is that chart history, the longer chart history is, the more, I guess, faith you can put in it, because the more you can see things repeat itself. So if you have a support line over a 5-year history, you'll see that support line. A support / resistance line, because it becomes support and resistance. It's the same thing depending on where the price is at. you'll see certain lines on like a 5-year history or a 1-year history, and you'll see that line hit all the time. When you get into the shorter time frames and you're looking at support and resistance, a lot of these things are like kind of like more subjective and not as accurate, in my opinion. But again, this is why I keep telling you these things are subjective. This is just my personal opinion on them. So I just personally use longer time frames. And I mean, any trading thing will recommend you have to use multiple time frames for sure. But me personally, when I'm trading, I'm starting off at a longer time frame and I'm working my way down. So I'm probably start. I really focus on 1 year, 3 months, and 1 month charts. But I'll still always look at a 5 year. Probably start draw my first support and resistance lines off a 5 year, then work my way down, and then and if it has shorter chart history, I'll just use however long the stock's been out in the market. So that's what I'll do for that. Do you set up screeners? Do you use weighted alphas to search for stock plays? No, I don't. I don't use screeners or weighted alphas to search for stock plays. Not saying that they don't work. It's just something I don't do. Like again, I'm like a less is more type of dude. So like I just really look for certain types of. I can't really explain it. It's just like, and that's where kind of like the art kind of comes in, where you just get like the holy trinity of things. I see like an innovative thing. I see some news thing that has a factor in it. I see a certain technical analysis chart shit I like seeing in it. And, I'll just be like, all right, I'm feeling good about this. But I'll tell you, once it goes through a process, like a stock doesn't automatically become a play. It goes from a stock into the watch list, and then I watch it. And and here's what you got to understand. Sometimes that requires you missing out. So you can think something's about to go up and put it on your watch list, and it goes up, and then you miss out on some gains. But I need to watch it for a certain amount of time before I even make a play on it. And that's just me personally. Some people just bust their load and hop on something. So, that's just what I do. But that's why I don't trust daily time frames. I just think they don't have the support and resistance for sure. It doesn't have the significance it has in the longer time frame, in my opinion. And I think a lot of people who trade would agree on that. So how much money should I have before I get into trading? Yeah, that's definitely subjective. The baseline, what I would say is don't trade any money you can't afford to lose, because especially if you fucking with options trading, you definitely have to be ready to lose everything. So I've gone through that where I started with a bankroll and I've lost a complete bankroll, and I started again. Like, so any money you put into it, you have to be willing to lose it all. So definitely, if it's money you can't afford to lose, don't fuck with it. But the amount of money is going to be all subjective. I don't know what y'all holding, so I can't really say that. Let me see if there's anything in the message board. I've been looking at the YouTube chat shit. Oh, Amina, shut up, man. Fuck out of here. Larry June is that nigga, man. Y'all hating on Larry June. Chill, son. How y'all hating on Larry June, man? No Larry June hate up in the building. Yo, so what up, man? Any more questions, man? I'll probably do this for like an hour, so hit me some more questions and you know what's up. In the meantime, actually, hold on real quick. One thing I do want to show y'all too is these are some useful. Yeah, y'all gotta hold on, stand by. I'm not no production nigga, so I'm not no YouTube nigga, so I don't. This is gonna be a little choppy, but I wanted to show you some sites that definitely need to put in your thing to start using. Hold up. So boom. So definitely barchart.com is definitely a good resource. Hold on, let me show y'all. So barchart.com is definitely a good resource. I can't see no questions right now, so just ask them, and when I come back to that page, I'll see them. But it's definitely a good research tool. Gives you shit on stocks, options, futures. I got the Premier account, so I have some features that you guys don't know. But it's just a good thing to look for trends of certain things. You can see this is how you can quickly find out like who's moving on certain things. You got things like volume leaders, top 100 stocks. You got market indices, so you could judge how the market's losing. This is another one tool I really like is right here where you see these performance leaders. This is something I like to keep an eye on in terms of adding a new play to not add a new play, but looking at for stocks to add on my watch list. So you could break it down by exchanges. You know what I'm saying? You could break the time frame like 3 months, 6 months, whatever. So it'll tell you all. What the fuck? I might have to look. It is 721. What the fuck is this? So see, shit like that, pops up at you. Company up 721% in 3 months. I don't know what the fuck these dudes are, but this is how you start looking at companies that you never even considered. So they got range. They talk about gaps when guys make gaps. You could look at the amount of the gap up and down. And for people who don't know what that is, referring to something like technical analysis, where on charts you don't see a consistent thing. There's a spacing where a candle starts like away from the chart, so it creates like a gap in the chart. And generally, all gaps in the stock market get filled at some point. So it could be today, it could be a week from now, a month from now, a year from now, but it eventually get filled. So point taken with Disney, there's a gap, like I think around like the 120 level. That happened when the smart money came in earlier this month in April. So like, to be honest, it was crazy. I was honestly thinking about taking a put on Disney, targeting that gap price. So that was that was just something to keep in mind. So it's just a good site, and it got the same thing for it got forex crypto. So if you're into that, it gives you information on everything. You can see hold on, you can see it. Let me pull this shit up. So like when he was referring to screeners, etc., you could see stuff to put on your radar. So it'll show you see call movement, put movement. You can look it all up, make it puts. I'm not 100% sure if this is all of these features. I'm pretty sure a good amount of these features are on the free version, but I'm not sure if you have to get the premier version. But the free version is really good. I used the free version for a long time, but as I just, you just have to, I mean, in my opinion, when you just start taking things more seriously, you got to pay for some of these services because information is king, like, and that just helps you. Shortsqueeze.com is another good site that I use. This is a good site because it just tells you, and I also pay for this membership as well. I think Short Squeeze is like 30 a month or 300 for the some shit like that, and I think Bar Chart was something like that too, 200 or 300 a month. I mean, 200 or 300 a year, something like that. But in my opinion, they're like 20, 30 a month. I probably pay altogether maybe $150 monthly just for random. And I don't think you need all of them. I just use them because I want as much information as possible. But in my opinion, a lot of these things you're investing into your craft. So again, I get the money back from it through the trades and the information. So I don't think these things are bad investments to make. But they're also the free platforms for each of these sites are just as good as the not just it ain't the same as the paid one, but trust me, you could definitely get some work done. So I'm gonna just do a quick short quote so y'all see how it work. I'll do it on Disney real quick. I don't know why this shit was on Tootsie Roll. Is my internet bugged out right now? Why this shit's not loading up? Oh, shit. Alright, so let me do it on Disney. So short percentage of float. So you see Disney is barely shorted. It's less than 1% of their float. But you can see the percent owned by insiders, percent owned by institutions, market cap. You can see the trading volume. So a lot of these things are good, especially when you're in a play. You want to kind of know how the movement's going. So these are all good things to use. Also, y'all guys know TradingView. TradingView is great. That's what I use for charting personally. Bar chart has charts too, but I personally use TradingView. I just like their platform better. Let me pull up something just that doesn't have any. I didn't do nothing on. Give me a fucking stock. I put up UX, United States Steel Corp. So this is like TradingView's platform. I personally, why the fuck? Oh, it still has the. Let me just take off these indicators. Give me a second. All right. So this is TradingView's site. You could change the time frames, the dates. These are indicators I've put on at the bottom, but this is how they generally look until you start adding indicators. You could change the how you want the charts. I don't recommend anyone using anything outside of candles. That's what we work with, but you can change the time frame of the candles and everything. Shows you the my bad. It shows you also shows you earnings dates for each of the stocks you pull up. Tons of indicators on here. Um, these are a couple of my favorites that I use in general. If y'all wanted to take a look at it. But they got built-ins, tons of built-in indicators. They got a public library, which these are indicators that people make that you can also use. I actually use one, this one by a Lazy Bear, the Squeeze Momentum Indicator. I actually personally like it. Let me just pull it up so you can take a look at it. Why did it pull up everything? So this is how that indicator looks. And I like it because it kind of generally shows like trends in market. I really use it to view consolidation patterns. So when you see like these black crosses come up, you see the price goes into consolidation, like as you see up here. So it kind of gives you an indication when uptrends are kind of about to develop and downtrends are about to begin. One thing though, you can't really judge the peaks because one, you don't really know when the peaks are going to form, and sometimes the peaks aren't necessarily the lowest price the way it breaks out. So, and sometimes you'll have, I'm trying to look for a section where you'll have a green uptrend, but it's the price is going down. So like you see at the end of this green trend, you still have a price drop. So you can't really bank on this as like a uptrend, downtrend signal thing. I use it kind of as a guide, but not a 100% thing. But I really like it for the black crosses, and it kind of lets me know when consolidation is beginning or ending. So that's what I use that for. So let me go back to the other page. So let me try to pull up these fucking questions. All right, hold on. Let me scroll up. Do I set up price alerts for stocks? If I'm on a play, I'll set price notifications sometimes, like for when a certain threshold is hit, just so I can start watching it. And that's also helps with my anxiety in terms of like that's what I'm saying. Some of y'all watch the charts way too much. Like you make a strategy, you stick to it, but I'm not like watching the charts all day because I mean I do, but I don't. Like I have charts up on my desk. I'm not gonna lie, but I'm not necessarily like focused on them all day because it's ridiculous levels of anxiety that you just don't need. So sometimes I'll have the charts up, but when an alert comes up when something happens, like all right, now I got to start watching this chart, So that's how. But again, I'm not saying you don't do it. That's just what I do. I did the premiere from the bar chart. I post whatever people want to see from there. Yeah, good luck, Sean. And that's yeah, you're right. Bar chart has tons of resources. I actually recently signed up for bar chart. But bar chart is definitely worth the money in my opinion. Short squeeze I think is more optional, but bar chart I definitely think is worth the money. What's the best indicator you believe? Well, what's the best indicator to you that makes you believe there's a good play coming? No indicator makes me believe a good play is coming. I like when I get a combination of things. So I like when the RSI is not overbought, oversold. Like so, let's put this in a perspective. I'm speaking in a perspective if I'm assuming a stock is going to go up, right? So I would want the RSI not overbought, not oversold, but trending towards overbought. I would like that in combination of a extended consolidation period and like from some that smush indicator, which is a custom one a dude made, so that's not even like I guess name brand indicator. I like seeing a consolidation about to release on that, and I would like to see confirmation on the 5-day exponential moving average, 90-day, 200-day. So I really like when things like align, like it's like I like when the stars align on the technical indicators. So that's how that's why so the technical indicators and also like good uptrend signals on the MACD. So the ones I use personally, I use a bunch of different ones. Sometimes I mix them up, but mainly I'm using that um, I have the RSI. You know, I got the 90-day, 200-day SMA. I got the 5-day EMA on it. I got MACD. I got RSI. I use that smush indicator. I also will use pivot points too, but I don't always use them, and they make the charts really messy. So that's why I don't really put them on the charts that I send you guys. But the floor trader pivot points. Um, so there's no one indicator that'll make me say a stock is going up, and that's why I keep telling y'all these things are subjective. There's never gonna be one indicator that I'm like, oh, this shit happened and this stock is gonna do this. Nah. But when I see all of them in a line, then I'm interested. Hold on. Shit, let me scroll down. Blah, blah, blah. I'm new to this. What should I get started? You probably just came into the chat. Like I was telling people, first thing you got to do is get a hand on stocks. So I guess after the replay, you could hear that part earlier. So that's what you would do for that. Let me see if there's any things in the message board. Hold up. Amina asked me to go through a chart so I can see a thought process. All right, yeah, I'm about to do that now. Do you use the alligator indicator? Nah, no, I don't. I don't know what the fuck. I don't even know what the fuck that is, to be honest. So, again, these joints are subjective. You don't got to do all of them. So, Amina asked me how my thought process are going through a chart. So, y'all give me a stock that y'all want me to just like my thought process. Somebody just throw a stock, and I'll pull it up and then I'll go through the thought process. Matter of fact, let me use X. I bet. So if y'all don't know that X is US still, let me pull that shit up. Hold on. Alright. Alright, X. So X is a thing with long chart history. So again, like I said, I'd have this indicator already pulled up. Let me I'd have that one pulled up. I'd have RSI already pulled up. And I'd have my MACD pulled up. So those off top already be pulled up, right? I don't really go past 5 years, so the first thing I do is I'd start at the 5-year mark, and I just pull up the chart from a 5-year thing. So now when you talk about support and resistance, I'm looking for certain things. Like I'm looking for certain big candles, and I'm looking for certain movements. I'm looking for, and again, this is why I tell you these things are subjective. But I'm looking for, and when you start doing this more, let me pull this up full screen. When you start doing this more, you can kind of start eyeing them out. So I'm going to start looking for big candles where something happens. So I'm going to take a horizontal array, right? And I'm looking for one. So right here, you see this is a big candle. I know y'all see the huge one down here, but the reason why, and I would mark this off too, but the reason why I'm starting here is because, as you can see, this 5-year span has more activity up on these levels. So I'd start right there with a line for it, right? And now here's the thing, what you'll notice too. And this is where you say support and resistance is subjective, because some people would put a line here as well and really consider this like a range, a support and resistance range, this range right here. But I'll start at the top of that. Let me take this off. I'll start at the top of that, just right here, right? So one thing you'll notice on this, and this is why I say 5 years more thing, one thing you'll notice on this is that it's been tested multiple times, right? And every time it gets tested, you notice a candle of significant size had to break through to go out. Now, since this is 5 years, these candles are on weekly candles, right? So you see this thing broke up. It was a big candle. These small candles kept fighting. They couldn't break through. It rose up again a little bit, but it took another big candle to come down, and then it went really down, right? Then it rose right back up. Then this is the kind of big candle, nothing too crazy, but it rose back up. It got up here, came back down, and another big candle required to kind of. So you know this is a good support kind of, there's a range right here. Then I'm gonna start working my way down. The reason I'm not really worried about beyond this right now is because this is where the stock is at right now. So it's a significant amount of space. So now I'm gonna like work down closer to it. So boom, let me get another ray. You kind of see another level right here. So this was a fairly significant candle that kind of, you see it's struggling to get up here. This was a big candle, couldn't break it, fell back down hard, came back up. You see another big candle was required to break it, but another big candle came back to take it down. But you see huge candles are required at these lines to break this barrier. So you know this is a significant number right here, right? So now we're gonna probably go down even lower. So boom. So you just see this one right here. So you see it, the same thing. Big candle, try to challenge it, couldn't break through. Big candle kind of tested it. And this is why I say it's a range, because you could easily put a range between right here and you'll see it's big candles required to get through it. So you'll notice it, you'll see the price getting stopped, but once now you see these lines, you can kind of see like a battle kind of going on with this stock at these kind of price points. So this will probably be the most I do for, I probably want to note this because this candle is really large. I definitely want to make a note of this line right there because this is a significant candle. And I definitely, even though this is, I'd consider it a resistance point right now, this one really isn't proven because it got tested once right here, but that was really it. So, but it's something I'd have to put a line to just keep track of it. So now I come down, let me move this out the way. So now I probably work my way down to a year, right? So now I'm in a year graph, and I probably do the same thing with some other resistance points. Or I might not, because now I'm looking at this in the year graph, I feel these levels are the strong points. Again, support and resistance is subjective, so you can draw as many support and resistance lines. And another thing too is a lot of those mini support and resistance, I'll call them, I'll get that from the floor trader pivot. So hold on, let me just put those up real quick. So if I put my floor trader pivot points, shit, I'll put 2 bytes in. All right, so this looks super confusing, right? Actually, I shouldn't have used it on a year. Floor trader pivots aren't good on a year. I don't know what the fuck I was doing. I'll put them on later. But the mini support and resistance, this for the year chart, I actually like where this is at. And you could see it's the lines, even though we condensed the time and now these candles on a day rate, you still see the lines hold long term. And you see what was required to happen to them. You see the stock test them, come back, beat it, get tested again at this. So you kind of see it holding. You see this kind of acting as a resistance, holding this down. It comes back down, a big candle to break it. Now it's coming back up. So US still just had a good day. I personally think it's still in a downtrend. Hold on, let me pull up my indicators. Yeah, it's definitely still in a downtrend in my opinion. I mean, you have a kind of artificial spike on the RSI. That MACD is indicating that it's about to uptrend, but I would say that's kind of based on, also, I forgot to put volume. You also always want your volume shown on the graph. So this is I always have volume on the graph. That's something I'll just have from jump. So you'll see the red indicates a decrease in volume, like by a lot, like how much. So you can look at the bars and kind of see changes in volume and how they correlate with the stock price. So boom. So I go down into a 3-month time frame. As you can see, these lines are still, now we're in a 1-hour candle. You can see these lines are still making sense because you see the stock is still holding. So this is why when people are talking about I don't work in smaller time frames is because the line you'll draw in like a 5-year or 1 year, when you break them down into smaller time frames, you'll see they're still relevant in all of the time frames. So, and that won't be the same if you draw a support and resistance in a small time frame and go further out. It won't make a lot of sense. So right now, it looks like, so here's how I look at this. So this is 3 month. Let me go to 1 month real quick. And I'm looking at all these time frames. So I'm looking at it in a 1 month scale right now. So I go back to 3 months because, like I said, I swing trade. I'm not really a day trader, so I'm looking at the trend, right? So in my opinion, right now it's going to go up, but I don't know if it has enough surge to break this resistance point. And I mean, this is just something I'm hypothetically throwing out there. So now because this is the thought process I'm thinking. So now I'm like, I put this on my watch list, which I actually am looking at this chart, and I'll just watch it for a couple of days. And I'd wait till it gets, because I think it probably might get to that 18 level. So I might put a little bit of call on it and try to ride it up a little bit. But the moment it gets to that like 1884 level, I'm probably gonna look into trying to take puts on it, and I'm gonna try to see if there's some changes on it. So right now, like even in the 3 month, you do have an uptrend on it. So you could possibly make a call on this, make some money in the really, really short term. I don't think, and this is what you got to understand, man. What goes up must come down. Like big candles like this, like these candles ain't sustainable. You want price increase, like something like, hold on, let me look at something. This is the type of price increase you want, where you see this happening, like where it's like it went up, went down a little bit, came back down, retraced a little bit, went back up even more, retraced a little bit down, went back up even more, retraced a little bit down. This is normal. This is a normal uptrend. This shit right here is not normal. Let me put it in a one. This shit right here is not normal. You see, even in this downtrend, this is a normal downtrend. Like you see it going down and coming up a little bit, going down, coming up a little bit. So again, with option pricing, now when these peaks and valleys are happening, this is the volatility that comes in our pricing. So you got to kind of have the stomach for it. Matter of fact, hold on real quick. Oh, and then let me just show y'all something real quick. So when I was talking about the other smaller support and resistance, so now we're in a 1 month. Now I would use the floor trader pivots on. I'd use the floor trader pivots on a 1 month. So now these lines are like mini supports, but their floor trader pivots are based on the day prior's activity, right? So they're consider it the two green lines resistance and the two bottom ones support, right? So this is S1, this is S2, this is R1, R2. So what happens is how people use floor trader pivots is imagine you just got a line dead in the middle, right? So when you start seeing stuff trading, leaning more towards S1, it's usually a signal that it's going to go down even further, like to hit to S2, which will probably become the S1 the next day. You know what I'm saying? So as you can see, let me pull this out a little bit further. So you could see kind of where this drop happened. So this is when it was still up here, touching the resistance level. It came back, tapped S1. It came back. It keeps tapping S1, and it had this big drop. And you could kind of, so people use the floor trader pivots to kind of gauge upcoming trends on the market. So that's where I would use, like when I'm saying like the mini support and resistance. Most of my support and resistance is drawn on a 1 year, 5 year time frame. But also, while we have this up, I want to do something real quick. Let me pull up Disney, because I want to make a point about abnormal activity and normal activity. So this is Disney for the month, right? This is a gap, and this will get filled. Oh shit, I still got notes on this shit from the thing. Let me delete that. Let me delete that too. All right, this shit right here is not normal. This shit is the jig. And this is why I stay away from name brand stocks. And this is why I blame myself for losing money on Disney, because I'm a dickhead. Because I shouldn't have. This shit is a fucking red flag right here. Like, this shit is not normal. And when you see some shit like that happening, you just got to know the jig is up. And you can try to play it, but you know if you get burned, you know what jig is happening. This gap will get filled, probably before the year is up. But this shit, Disney will be back. Disney will have to come back all the way down to $117 eventually. I don't know when it's going to happen, but it has to happen. When it happens, y'all going to be like, oh, shit, that's what he was talking about. It just has to happen. It's going to happen. Let me pull this out into a year. You do 5 years, man. Hold on. This is 5 years of Disney's progress, man. 5 years of Disney's progress. This is the biggest fucking a week candle. These are week candles. This is the biggest fucking week that happened in 5 years. And this happened the week of April 8th. We came in this week probably at the end of like right here. We caught this little jump and then we got raped right on this part. But this is the jig, my nigga. Like this is the jig right here. So once we saw that, that should have been the first thing. Like yo, something's up. Or even when we did hop in and catch our games, we should have just hopped out quick. Like yo, this shit not sustainable right here. This not sustainable. And look at Disney's growth over the last 4 years. Look how normal this looks. And this is what this is a normal uptrend where you have uptrend, retracement, up, retracement, goes further up, retracement. This is normal. This Disney up until 100, what time? And look, right around that 107.15, $2 from 117. This is normal Disney growth movement. This is normal growth. So Disney probably really only has 117 worth of stock value, real talk. And this is the jig that the market banged us on with Endgame. And if you didn't hop out fast enough, this is where you got burned. So let me pull out the back to the regular screen and see if y'all got any other questions. Shit. Give me a second. Sorry. Do overstock afterwards if you have time. Yeah, I know I was only trying to do yeah, Sean, you're right. And when you see abnormal activity, the Trump tweets probably did it. Like, and that's the thing, Trump tweets will do something like that. So you know, you got to take that in a factor. So again, if you're looking at U.S. still going up, you're banking on news right now, because that's really what you're banking on right now. So you gotta like. I'm not saying you're gonna lose money or you're not gonna make money, but you gotta just factor that in. Like that's what you really banking on. So these are things you gotta take into consideration. All right, I was only trying to do an hour. Hold on. OSTK. Let me see if there's no other questions. All right, I'm gonna do overstock real quick, and then I'm gonna check out, and I'll probably do any last minute questions. Yeah, that X. I mean, dudes made money off that X. Yo, look, yo. Like I said, man, trade with rubbers, bro. Y'all can raw dog the trades all you want. Just don't get burned. You feel me? All right, so we're gonna do OSTK, and then I'm gonna check out here. Hold up. OSTK, all right. Overstock. All right, boom. So again, I'm putting overstock on the 5 year, right? So let's take a quick look at this. I'm just gonna look. So for longer stocks, sometimes I'll look at the all-time history just to, because see, in this case, it's kind of relevant because you kind of see right here, it went up 2005. This is like the housing crisis time. I just want to kind of I'm just looking like just to kind of get an overall vibe of what they were doing. It looks like they took some L's in the housing market, recovered during that, took some L's in 2012. I don't know why, but I'd probably look into that, why that happened. Bounced back up, came back down, had a big surge in 2018, probably due to what's. So it had the big surge when it's 2017, beginning of 2018, drop during the whole 2018. So this is kind of interesting. It was dropping during 2018 while most stocks were performing. It was underperforming. Bounced back up this quarter and it dropped back down. So that's interesting. So on a 5 year, I definitely start off over here. Now you want to find big charts towards the left. I'd start towards left and then work my way forward. for the most part. Another significant line, as you can see, gets tested here. These little candles weren't big enough to break it. This broke it momentarily. Then this one really broke it. Stayed down under. Needed a big candle to break up. Big candle to break down. This big candle couldn't even break it. It got retested again over here. For this price, since it's already at the 21 level, I wouldn't even worry about up here yet. Because again, I swing trade, so I'm looking in like the relatively short term, 3-month, 6-month span of movement. So it's the 1 year. You still see that line is still relevant on a 1 year time frame. What I'd also do is I draw another one right here, because this candle is very significant. Big red candle. So boom. See, a big candle was required to break it up. Came back up. Look, it gets caught up by that 5-year resistance level. This is why I like long-term resistance, because like when you start going smaller into the time frame, you see how relevant these lines are because they hold up. So now it came back to that 5-year one, came back down. So this 2167 level is a very, very strong level in my opinion. So it requires significant amount of activity to break that. This one seems significant as well too, but definitely this line up here has a lot more significance than that one. So you go in at 3 months lens. Again, you see it verified by big candles needing to break it. So even now we're in a 3-month scope. You see these lines on the 5-year and 1 year still relevant and they still work. Again, now on the 3-month scale, I probably might draw another line because it's so far away from the price. You kind of still want to gauge some immediate resistance points. So this right here, and again, in this time frame, this right here is a relatively small candle and compared to the candles we were looking at. I know y'all looking at this big one right here, but I'll tell you why I didn't use that one in a second. So this candle right here, I'm sorry, this is the candle that I'm looking at. This candle right here, you'll see, even though it's not as big as like one like this or the ones we were using before, is relatively big compared to the candles in this time frame. So I do another line. And one thing, and you'll see that same big candle was tested. It was a big candle crossed it, but these little ones tested. So this is a tested line. Even though it was only tested like in that short time frame for that week, it held and it downtrended after that. Then I'd probably put another line right here too. This is another significant candle in the scope of the price right now. So kind of as you see, these candles that followed, they kind of worked like how this one did. It got tested immediately after, and it still caused the downtrend. So that could be a significance of a little bit of strength between these two lines. You definitely know that this also makes this one seem a lot stronger too, and this one's super, super strong. But the fact that, it's been tested multiple times, but it didn't really have like, you want to see a test, like, hold on, let me scroll out. You want to see like this type of test, like where it came in, it broke it, came back down, came back, it came in, broke it a little bit. Like this is something this line has been tested time and time again. So this is why this is stronger. This line has been tested multiple times as well. 1, 2, you see again tested right here, right here. These two, they were tested like immediately after they formed, but it looks strong, but you can't bank on it. So these are like the grain of salt you got to take. And again, I'd probably make another. See, there's a resistance somewhere around here too, and I probably, even though I don't have the big candle I would use to look at this level, would be this one right here, even though it's further to the thing. Let me and I just keep it there, but I just pull it back a little bit. The reason why I'm pulling it back is that you could and this is why I'm saying you kind of start getting an eye for it. So you kind of, once the line comes in, you can kind of see it more, but you see where this resistance, it came through, it was tested, even though this wasn't really a big break. And this is why the range is happening. The resistance is probably really at this level, to be honest. Actually, let me change that. I would put the resistance here. And I would actually put another line right there too, to be honest. And this would probably be the most I would put. Let me do that again. I wouldn't put another line in a 1 month time frame, but I'd keep that line there. And this one is more resistance. I didn't really, I mean, this is the big candle I'm using to confirm it, but as you can see, there's a line, this gets tested a couple of times. So this is where we at right now with overstock. Overstock looks like it's in a general downtrend, just looking at the chart. Now let me look at these indicators. So again, because I swing trade, I really like looking at my indicators and using like the 3 month time frame and 1 month time frame. So you see the MACD is trending up right now, but we have a cross right here, and it's a cross, and you see it's angling down. So this could be some exhaustion level, and it could be coming back down. RSI is kind of choppy, but it's in a good level. Could go either way, you really don't know. And you see consolidation starting to build right now. So at the end of this consolidation, when it gets released, you don't know. I think it's probably going to go down further. But as you can see from past history, when you look at it in this 3 months lens, you kind of see you have these uptrends, then you have a downtrend, you have an uptrend, and you have a significant downtrend. So you kind of, it's leaning like it keeps bumping back up and it's still going back down. And being at the RSI's in this level right here, it's in a position to go either way. But there's a good enough levels for it to drop down. If it does going down, it could really sink. Let me look at it in a 1 month too. Yeah, overstock right now. I mean, it's in a general downtrend. I think a put on this in like a 6 month time frame, 3 month time frame. I don't think you really could lose on that. I might do one myself. I don't think I'll do it as an official play, but I'm looking at it right now. I think you could bank on it. Let me go back to 1 year. Yeah, I mean, see, the problem is it's at low levels price wise on the year term and in the 5 year sense. These are really low levels for it. So you have to go back to it's like 2012, 2013 times to really see it dropping low. So this is kind of a bottom for it. Almost, but I think it's gonna go down more. Like, so this is where it kind of gets tricky because I think this shit is gonna go down more. Cause for this to be performing like this in this stock market right now for this quarter, and yeah, I think it's gonna go down more. I think a put on this in like a 6 month time frame is definitely a doable move. So yeah, that's so. All right, let me go back to the questions. All right, so that's it. Let me just finish with the last questions and thing. Yeah, Bitcoin went up a little bit too, man. But to be honest, I got more BNB than Bitcoin, to keep it 100 with y'all. Like, that's what I fuck with. BNB is a new Bitcoin in my opinion. That shit's gonna do numbers. So. Did Dalio want confidence? Nigga hit me up, say, we want confidence for calls. I can't give you confidence, man. I can only tell you what I see. That's all I can do, man. I can only tell you what I see. But yo, thanks for checking in. We're gonna do these more often. Nigga be busy and shit, but we're gonna definitely try to do these more often. Y'all be safe out there. Y'all trade. New plays are coming out. I'm gonna try to get them out before market open on Monday. I'm not sure if I'll get them out for y'all on Sunday. But as y'all know, I don't rush plays, so just know that if it take me some time, it's because, I want to make sure the shit right for y'all, you know what I mean? So, all right, just go back to regular scheduled programming. I'm going to catch y'all. Peace.